Let's get some more on those remarks from the Fed Chief, Janet Yellen. And joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives from the CME Group in Chicago. Larry, great to see you as always. What did you think of what she had to say? Those two sort of prongs, continued loose monetary policy, yes, good for markets. Yeah. On the other hand, though, worried about stretched valuations in some sectors in the market. Yeah, no, great question. I mean, the first time that I recall a Fed chairman saying anything about the market in 14 years, and last time, year 2000, it really did upset things. So yeah, very, very surprised. Not that what she's saying is untrue, and not that she doesn't have the right to say what you want to say. That's absolutely fine. That said, it was really crazy for a while. As it started to bleed into other sectors, people starting to think like, well, we thought that the Fed had a dual mandate of talking about employment and growth, but not talking about sectors. And so everybody seems to be thinking on what's another shoe to drop? What's the next time she's going to talk about the markets? It doesn't change, though, the current assumption around, the timing of the first rate hike, though, what she had to say?
Yeah, no, I don't think so at all. I mean, her message, which could be seen on the U.S. Senate website, it was clearly not outrightly dovish like everything else has been. It's moved to being a little bit more balanced in her approach. But we all know that's coming. I think the only place where we don't see it coming is when we look at the Fed fund rates, our forward rates for 1 year, really pretty complacent, not pricing in an early rate hike. But it seems like everybody else is. So it's the way it goes right now.
And just quickly on Europe as well, because we saw that disappointing zoo sentiment data out of Germany.
Yeah.
Overall, though, I mean, your concerns about Europe there, I mean, because this has been one place where people were going for better returns.
Yeah, absolutely, and I definitely am a little bit concerned with Europe. However, and you're right, the numbers have continued to dwindle lower over the past 4 weeks, but not enough yet to drastically change the narrative or materially change GDP numbers. And you have to remember that a lot of that is offset by the bright spots in China, where it was just the opposite about 3 months ago. Everybody was worried about China, not worried about Europe.
Larry, unfortunately, we're going to have to leave it there today. As always, thank you so much.
That's okay.
Larry Shover there from SFG Alternatives.